To discuss, I'm pleased to say, is Mohamed El-Erian of Bloomberg Opinion and Queen's College, Cambridge. Mohamed, always fantastic to catch up with you, sir. I wanted to start with your latest piece in Project Syndicate. It reads as follows. Here's the quote. As price increases accelerate, policymakers at leading central banks are slowly starting to move away from the narrative of transitory inflation. But the needed pivot is far from complete and not nearly quick enough, particularly at the US Federal Reserve. Chairman Powell Mohamed speaks later. What would you like to hear from him?
So I know what we will hear from him. He's going to push back against the notion that inflation is not transitory, and he's going to push back against the notion that you cannot separate you cannot separate taper from rate hikes. The market recently, and particularly at the front end of the curve, as you know, John, because you've been talking about it, has been starting to price in not just higher inflation, but also the concern that the Fed will not be able to sequence the taper and rate hikes in the way that the Fed is hoping to.
Mohamed, what do you make of that, what's happening right now? If we look through the yield curve and you look at twos, we're pricing in rate hikes through the belly of the curve. Then you look further out and look at break-evens, we're pricing higher inflation. Can you reconcile that? Pricing in higher rates at the same time as pricing in higher inflation further out. Does that make sense to you?
It does, because the markets are starting to believe, I want to say starting because we're still early in this process, are starting to believe, Jonathan, that the Fed is going to be late to the game. So even though they will have to start hiking, they will be so reluctant to do so that we are likely to go through two distinct monetary policy regimes. First regime is the Fed being late. The second regime is the Fed having to implement that one thing none of us wanted to implement, which is the emergency brake U-turn, which means having to slam on the brakes. And that's why the further out you go in the curve, the more the growth issues dominate the inflation issues. And that's why you've had the massive flattening of the curve.
I want to bring in the Hugh Pill commentary. Before we get there, though, I want to talk about Governor Waller. Mohamed, he has changed the way he's using some of these words. And I just wonder, before you act, you speak differently. And this is what Governor Waller said more recently. The next few months for me are critical. There's much more upside risk than I anticipated that this may continue on. The language is changing. You touched on that in your piece, Mohamed. You say it's not changing quickly enough. I just wonder how you expect it to develop in the coming weeks, the coming months. Because as you've pointed out, transitory for longer, Mohamed, doesn't quite cut it. What are you expecting to change just on the language side? And then we can turn to policy a little bit more.
So I think the language will evolve slowly. But, John, we are so behind. Remember, when that transitory narrative took hold of policymakers' cognitive mindset, remember what the outlook was then. It was base effects. Well, we are towards the end of October. The base effects are out. It was initial demand-supply imbalances. Again, that's 6 months later. We are seeing increasing inflationary pressures, not declining. And third, it was about a very strong recovery. Well, most people have taken down their numbers for economic growth, unfortunately. And yet, transitory still has hold of the policymakers, not so the corporate leaders. They've understood. The writing is clear for them. They've got to make really difficult decisions as to what to do with the higher costs. And a lot of them feel confident that to pass it through into higher prices. So you're seeing this incredible disconnect between policymakers, especially at the center in Washington, less so at the regional central banks, and on the other side, corporate leaders who have to make decisions forced by market realities.
Mohamed, you've said this a few times. There is some tension here between what the Fed is telling us, what corporate America is guiding us towards, which is this is going to go on for a whole lot longer, and what people on Main Street actually feel. Are you seeing evidence that the story you and I discuss every single Friday, it's starting to hurt growth? Are you seeing signs of that already?
So we see it, for example, the latest housing market. First-time purchasers have come down significantly as a percent of new purchases. That's a concern, John, because it has social implications. So we're starting to see a little bit of demand destruction, but overall demand remains strong. I don't think most companies have an issue with demand. It's the supply side. In fact, some of them, as you know, are saying, well, can't we do with a little bit less demand right now and have it later on? Because they simply cannot meet the demand they have.
Mohamed, to speak to that, can we talk about Snapchat just briefly? That stock's down 20%. If we bring up some of the names associated with Snapchat, the likes of Twitter, Facebook, they're getting hit as well. Mohamed, have you ever seen a company turn around and say, we can't get ad dollars because companies don't want the additional demand because they can't meet it? How bizarre is that? In all of your years covering this stuff, how unique is this moment?
It is unique, and it speaks to what I've been talking to you about, John, for a while. The paradigm has shifted. For a long time, we were living in a world of deficient demand. We are no longer living in a world of deficient demand. We're living in a world of deficient supply. And mindsets have to evolve because that is the world we're living in now. Now, companies don't have the choice. They cannot wait. They cannot move from this concept of transitory to persistently transitory, extended transitory, rolling transitory. It's meaningless. It's analytically meaningless, okay? The minute you move away from temporary for a few months, behaviors change. And that is what we are witnessing every day, is behaviors are starting to change. Markets are lagging a little bit this process. Now, it doesn't mean massive sell-offs because we haven't solved the major problem for investors, where to go. Investors don't know where to go. And they don't know where to go because all the prices have been distorted. And that's why we're seeing crypto attract more investors. And that's why we're seeing people continuously go to the equity market because there really isn't much of an alternative to protect yourself right here.
We've got all-time highs in the equity market. Mohamed, let's wrap some of this up. There's clearly some tension here between what the Federal Reserve is telling us and what markets are pricing. That's original for this year because for most of this year, this market has been on board with this transitory theme. Seemingly no longer in this market and seemingly no longer on the south side as well. Bank of America, the latest, the team pointing out, they've just published. They bring forward their first hike to the fourth quarter of 22. They're not alone. Matt Lazzetti of Deutsche Bank joining the likes of Bank of America and Michelle Meyer. What I understand from your standpoint now, Mohamed, the policy options here. What you think they should do, I think, is widely understood right now. I want to understand from your perspective what you think they will do. You've talked about that risk of the U-turn, the sharp, abrupt turn on policy. What do you expect they will do?
So it depends who they are. If you're in the Bank of England, November is live. If you're at the Fed, you're going to start slowly changing your language, but you are going to do it very, very, very slowly. If you're at the ECB, you'll see no need to even change your language at this point. And investors are going to have to navigate not only the assessment of where is policy relative to where it should be, but also what do you do in a world where dispersion among central banks becomes pronounced. So that's the two issues that we're going to have to be discussing, John, because we're getting there. But the Fed in particular, it is still trapped by its narrative talk. It is trapped by it. So it's going to move very slowly away from it.
Mohamed, as you would say, you've got the start of the journey and then you've got the shape of the journey. How steep the trajectory will be. I remember you saying to me years and years ago, what we'll experience from this Fed is the loosest tightening ever. That's exactly what we got from the Federal Reserve 10 years ago, in the last decade at least. Now what we witness, I wonder, is different. Hugh Pill of the Bank of America spoke to the FT, Mohamed. He talked up about that live meeting. What I thought was interesting later in the article, he was asked about whether they would go back to pre-pandemic rates of 75 basis points. And he pushed back against that. He's maintaining and retaining this idea that the rate path will be really, really shallow. Can you help me understand that a little bit better from your perspective, the start point and the subsequent shape of the journey thereafter?
Yeah, and that has to do with the mistiming between monetary and fiscal. It has to do with other growth impulses, and it has to do with the UK realities also in a post-Brexit world. So they sense, and I think correctly, and the Bank of England has been way ahead of others, both in its inflation assessment and in its policy guidance. They sense that they need to tap the brakes now because they don't want to have to slam on the brakes later, which is the risk that the Fed is going to run in a meaningful way. So they're looking just, if we tap the brakes now, we're not going to have to apply as much, pressure on the brakes overall than if we wait and start later. That's the judgment they're making.
Mohamed, before you run, can we talk about something a little bit more serious, important? Liverpool on Sunday against Manchester United. How proud are you of Mohamed Salah?
So I don't think you can see me smile more than I have. I mean, I don't know. People should go to YouTube and see his last goal last weekend, where he was surrounded by 5 people and somehow managed to put it in the net. I mean, he is just brilliant, and it's wonderful to see him do so much for English football.